How to skim profits off your stock portfolios. Welcome. If you're looking to boost your income while holding on to your favorite stocks, you're in the right place. Today, we're diving into the world of selling call options. This commonly used strategy can help you generate extra cash flow while you maintain ownership of your shares. Let's take a look at how it works. First, let's break down what selling call options actually means. When you sell a call option, you're giving someone the right, but not the obligation, to sell 100 shares at a specified price, known as the strike price, before a certain date. In return, you get paid a premium upfront. It's like renting out your shares. For example, if you own 100 shares of XYZ stock currently trading at $50, you could sell a call option with a strike price of $55 for a premium of $2 per share. You'll receive $200 right away since options are typically sold in contracts of 100 shares. But why would you want to sell call options? Here are a few reasons. First, you can generate income without selling any stock at all. The premium you will receive can provide an immediate income boost that's very welcome, especially when stock prices drop. Second, people sell call options in order to hedge against downside. If the stock price drops, the premium helps cushion your losses. Third, people sell calls as part of a defined strategy. They know exactly how much they can make and at what price their shares might be sold. Of course, there are pros and cons to consider while selling calls. On the downside, if the stock price skyrockets above your strike price, you could miss out on potential gains since you're obligated to sell your shares at the strike price. Now, let's talk about how to choose call options to sell. If options are available, you'll want to check out the options matrix, which is a table that lists premium spreads beneath weekly or monthly expiration dates. The first thing you need to decide is your stock sale price, which is also known as the strike price. First, select your strike price. Choose a price that you're comfortable with selling your shares. This should ideally be above the current market price if you want to keep your shares. Next, pick the expiration date. This depends on how long you want to hold your position. Shorter expiration dates generally yield higher premiums but require more frequent management. Finally, analyze market conditions to get a feeling for how prices are moving. Keep an eye on volatility and overall market trends. A lot of call sellers wait until earnings week or other more volatile seasons because higher volatility usually means higher premiums. Let's take a closer look at an example scenario to see how this works in practice. Imagine that you sell a call option for XYZ at a $55 strike price and get a $200 premium. For $200, you have promised to sell 100 shares at your $55 sale price. While you wait for the expiration date to arrive, let's say the stock price climbs to $60. You're still only obligated to sell at $55, but you have already pocketed that $200 premium. So, your total profit would still be $2,700 instead of $3,000 if you just sold the stock directly. Not too bad, right? On the other hand, if the stock doesn't hit $55 and stays below your strike price, you get to keep both your shares and the premium. If you do this week after week, it can be a great way to enhance your returns. Just remember, before you dive in, selling call options isn't without risk because you'll be obligated to sell your shares at the expiration price. Advanced traders sometimes sell calls without owning the underlying shares, and this can get extremely tricky. So, start small. Practice on paper or in a simulator account. Always do your research, understand the stock's potential, and consider your overall investment strategy. If you're new to options trading, start in a practice simulator account. Fake or paper trading accounts are offered by most brokerage firms without charge. This is absolutely the best way to get the hang of selling options. If you found this video helpful, please hit that like button and subscribe for more investment tips. It really helps others like you get this information. Also, be sure to drop any questions or experiences with selling call options in the comments below. We would love to hear from you. Thanks for watching, and happy investing.